As I said, the broader market is lower. Bank stocks really taking it on the chin today, and yet digital assets are outperforming. This is the idea that digital assets actually benefit when the banking system is not so secure.
Something very big is happening in crypto today. As the Fed again raises interest rates, as the banking system continues to show cracks, there is some altcoin news as well as Bitcoin news that you need to be aware of as an investor. So as you've heard, Federal Reserve raises the fund rate by 25 basis points, and for the first time in a very long time, signals a possible pause.
Americans are about to pay more again for their mortgage, car loan, and credit cards. The U.S. Federal Reserve hiked its benchmark interest rate for the 10th time in a row, this time by a 0.25 percentage point. But now the Fed chairman is hinting that rate hikes might take a pause next time around.
A decision on a pause was not made today. You will have noticed that in the statement from March, we had a sentence that said the committee anticipates that some additional policy firming may be appropriate. That sentence is not in the statement anymore. We took that out, and instead we're saying that in determining the extent to which additional policy firming may be appropriate to return inflation to 2% over time, the committee will take into account certain factors. So that's a meaningful change that we're no longer saying that we anticipate. And so we'll be driven by incoming data, meeting by meeting, and we'll approach that question at the June meeting.
Now, is this too little, too late? Because the exact same day as the Fed announcement, breaking, regional bank stocks are crashing just hours after PacWest, major regional bank, says that they're looking for a buyer. PacWest now down 57%, Western Alliance Bank now down 30%, Metropolitan Bank down 20%. All this just 2 hours after the Fed said the system is strong. And let's be very clear that the Fed caused all these problems in the first place. Because yesterday, the Fed had to choose between capitulating, giving up on cooling inflation, or letting the global banking crisis grow to systemic levels. They chose the latter. They chose, screw the banks, we still need to focus on inflation, which they caused. Make no mistake, both these problems were directly caused by the Fed in the first place. First, by flooding the system with money for a decade plus, also quantitative easing, and then rugging everyone by rapidly reversing course. So Jerome Powell giveth, and then Jerome Powell taketh away.
So the Fed raises rates to try to tame the high prices you see when you go shopping or you pay for services. But it also means you end up paying more for things like a new mortgage. A 30-year fixed mortgage was 4.16% back when the rate hike started over a year ago. Now it's 6.43%. So what does that mean? On a $500,000 loan with 20% down, that's an extra almost $600 a month. Now, a new car loan, about 4.5% last year was the interest rate. Now almost 7%. On a 6-year auto loan, that's another $63 a month. Credit cards averaged 14.5% before this rate hike campaign began. Now they're record high, above 20%. So if you pay just the minimum on a $2,000 balance, it's going to take you 11 more months to pay it off, all because the Fed is raising interest rates to try to lower inflation.
And Jerome Powell did address, will there be a possibility of a recession later this year?
But I do think that the situation in the labor market with so much excess demand, yet wages have been moving down. Wage increases have been moving down, and that's a good sign, down to more sustainable levels. So I think it's still possible. I think the case of avoiding a recession is, in my view, more likely than that of having a recession. But it's not that the case of having a recession is. I don't rule that out either. It's possible that we will have what I hope would be a mild recession.
Now, the good news, which most other channels aren't talking about, I will. Bitcoin is 75% of the way there to the next halving. But real quick, breaking news, Alibaba Cloud built a metaverse launchpad on Avalanche. So the cloud division of the Chinese tech behemoth Alibaba has built a launchpad for businesses to deploy metaverses on the Avalanche blockchain. If you hold Avalanche, here are the details. Named Cloudverse, the launchpad is designed to provide an end-to-end platform for companies to customize and maintain their metaverse spaces to try and find new ways of engaging with their customers. And with Alibaba, which some deem the Amazon of China, While Avalanche will provide the technology for building the metaverse spaces, Alibaba Cloud will provide the computing and storage. So if you like Avalanche, you like this. And a big piece of news for DeFi wallet and partner of the channel, Aurox. Gasless swaps have arrived. Say goodbye to needing ETH for gas fees and welcome seamless DeFi with the Aurox wallet. The Aurox Trade Protocol allows users to swap any asset without ETH in their wallet, possible with the help of Chainlink price feeds. So how does this work? Because we know the problem that they're solving, we've all experienced this. Almost every single person that has used a DeFi wallet has run out of ETH at some point. You can't just trade stablecoins. You need to have ETH in the wallet for gas. Well, Aurox has just solved this with gasless swapping. How does it work? Swap token A for token B, and the protocol converts a small portion of token A to ETH for network fees. Your swap is executed seamlessly without any hiccups, even if you never owned ETH. So to demonstrate this, we go to the Aurox wallet. Yes, it lists the price for Ethereum, but in this wallet, we only have 22 cents. And let's go to Uniswap. Typically, this is how it would typically go for the average person. If I do it just through Uniswap, it's not going to work. You do not have enough Ethereum to pay the network fee. But I go to the Aurox wallet, which now has gasless swaps. Let's go to USDC, swap for Ethereum, click gasless feature, and you can see they're using some of the USDC as a gas fee, which will be converted to ETH, instead of needing ETH in the wallet. Boom, gasless swap complete. Keep in mind, this end total is less than $1,000 because of Uniswap slippage, as well as network fees that were deducted. If anybody wants to download the Aurox wallet, there's a link down below, video description, check it out. And next piece of news for Coinbase. U.S. court orders SEC to respond to Coinbase on allegations within 10 days. So now the ball is in the SEC's court legally, as the SEC has been ordered by a U.S. court to respond to Coinbase's complaint over how it applies securities laws to digital assets. Meaning for you and me, we'll get some form of clarity within the next 10 days as the SEC has to justify, are they truly providing clarity? And the Bitcoin protocol doesn't care. The protocol is ticking along either way. Bitcoin is 75% to its next halving. Here's how past cycles looked at this stage. So as we know, every 4 years, the Bitcoin block reward gets cut in half, meaning this is supply getting mined into the market. And while Bitcoin has a fixed supply, there will only ever be 21 million Bitcoins ever. The last Bitcoin won't be mined for over 100 years, and every about 4 years, that supply faucet gets cut in half. And what's that mean to me? Well, as a Bitcoin holder, we know basic supply and demand. If demand for any asset just stays the same, say we gain no new adoption, if demand just stays the same and supply gets cut in half, price goes up. And looking at a comparison of past halvings, number one, we can see bull run tends to happen about 12 months, 12, 14, 16 months after the halving. And if this is the 2012 halving, we can see 75% of the way in, Bitcoin climbed to that next halving, then bull run. 75% of the way after the 2016 halving. Excitement was actually kind of early. Bitcoin topped out maybe a couple months after, local top, dumped pretty much into that halving, and then of course the rally to follow. And that brings us to today. We are 75% of the way there. Be sure to click subscribe for daily videos keeping you informed about crypto. Be sure to click subscribe because you want to stay up to date on the crypto market. And join us in Miami, Bitcoin conference for Web3 is a joke. Link down below. Come join us. See you tomorrow.